gold suffers from a lot of defects. It has a lot of great things, but it suffers from defects. It's heavy. It's hard to transport. I can't email it. It's hard to divide. Breaking a bar of gold is really hard to give you half of it. So Bitcoin has all of the elements that are positive of gold, and then it has some extra elements like divisibility to 8 decimal points. I changed my Twitter handle to Mark Yusko, hashtag 2.1 quadrillion. And people are like, what is that? That's how many Satoshis. Someday we're not going to talk about Bitcoin. We're going to talk about Satoshis. And Satoshis true. Will be the unit of measure. And there aren't 21 million, they're 2.1 quadrillion. That's plenty for everybody to have some Satoshis. So that idea of divisibility and transferability for Bitcoin is better. So we found that great use case. But the next layer is really interesting, which is, okay, that other 6 trillion of gold in jewelry and bars and stuff is actually used, again, as a store of value or as a store of wealth. So could Bitcoin then achieve that level? Not just a monetary use, but a pure store of wealth and value use. Yep, it could. And that's where, the original, Raoul Pal wrote the first one saying, that was $1 million a coin. I kind of adjusted it to say it's really about $500,000 a coin. If there's 21 million, you got a few lost, multiply that, you get to that 8 trillion. So at 450,000 per coin, people are going to be freaking out, right? They're like, it has to go to zero from here. Like, zero is off the table, right? We've reached the network effect critical mass where this technology is here to stay. And there are a lot of things it's going to do beyond just the gold store value use case. And there'll be other things that do that. And beyond Bitcoin, there's a whole world of Ethereum and DeFi and Polkadot and Cosmos and Solana and all these things. And again, story for another day, but as big or bigger stories than just the Bitcoin story. And I know the Bitcoin maximists don't want to hear that. I'm like, no, it's all accretive. It's all good. We're taking a TradFi world and an analog world that went to electronic, right, and centralized finance, that now we're going to move to truly digital and a decentralized world, which is just far superior. And, in 2024, we'll be talking about this blockchain era, this trust net, value over internet protocol or money over internet protocol, all those things. So again, long-winded way of saying we're early. There's a long way to go. And my conviction in the path and the direction has never been stronger. My conviction that volatility of price will continue, never been stronger. Now, the cool thing is that volatility is falling. Now, that's good and bad. Some people say it's good because it means more people will adopt, and I agree with that. I like volatility. In fact, I should go put on my Embrace Volatility t-shirt that I have. Volatility is your friend. What is not your friend is semivariance. Downside deviation from a mean is not your friend. Upside deviation from a mean, awesome. You should wave that in all day. In fact, I actually had this proved, right? It was rumored that Harry Markowitz, who won the Nobel Prize for the CAPM, said that he would have used semivariance in the CAPM, but the math would have been too hard and he wouldn't have won the Nobel Prize. And I'm a big Markowitz fan. In fact, someone made me a t-shirt once that says Markowitz is right, that I have at home. And I got to have dinner with Professor Markowitz once, which was awesome. It was awesome. And I said, Dr. Markowitz, is it true that you said that you would have used semivariance, but the math would have been too hard? And he says, of course, I wanted the dang $1 million. Absolutely. He said, volatility is a stupid measure of risk. It has nothing, downside volatility is what you worry about. And so here's an interesting factoid that I learned recently that I've added to my story about Amazon. So again, I don't remember if we talked about it or not, but Amazon has been a public company for 21 years. And in every year, including this year, it's had a double-digit drawdown. The average is 31%. Average, 5 times more than 50%, twice more than 90%. So very volatile. In fact, the volatility of Amazon is almost precisely the same, 81%, as the volatility of Bitcoin. Interestingly, the compound return at over 200% is almost precisely the same. Now, Amazon's 21 years, Bitcoin's 12 years, so Amazon's got a better track record. When was the right time to sell Amazon? That would be never.
Never. Yeah.
Never, right? Never.
Yeah.
How many people bought it 21 years ago at the IPO and hold it today? There are 4. Jeff, his mom and dad, and his ex-wife. That's it. And so why didn't anybody hold it? Because they got shaken out. And, you know,
only good for books.
Well,
a bookstore, come on.
I don't know if you did. I don't know if you coined the term diamond hands or somebody else, but I feel like
it wasn't me, but I like to use it.
All right. So this idea that weak hands are real, right? People get shaken out because they focus obsessively on price. And you know, we just launched a product in December. It's called a risk managed Bitcoin fund. And people say, what is that? I'm like, oh, look, we use techniques to mitigate volatility so that we're trying to protect you from yourself, right? Because all of us will react to volatility in a human way, the wrong way, but in a human way. Yeah. And the best thing you can do in investing is to find volatile assets early, lock them in a drawer, and don't look at them. In fact, one of my favorite stats, you know, the best performing accounts at Fidelity are the abandoned and deceased clients.
The ones that nobody's ever touched.
Nobody ever touched them. And so because people are prone to do something, and there's this great adage, I have hashtagged it, right? Don't just do something, sit there. The sitting is hard. And look, are we going to have another bear market in Bitcoin? Yep.
Of course.
Absolutely.
Yeah.
Absolutely. No question. And it's cyclical. And is it around the halvings? Yes, but it's halvings plus humans. Well, I like that, halvings plus humans. Just coined that. So I like that. Because humans are the ones that go from skepticism, okay, to optimism, to enthusiasm, to euphoria. Anyway, so I think sometime later this year, you know, we'll have that event, and there will be a time, again, not to necessarily sell all your Bitcoin, but to think about, one, do I want to hedge over this short-term cyclical period? Maybe.